Hello traders, Gary Wagner here. It is approximately 10:20 in Honolulu, making it 4:20 in New York. It is the first trading day of April 2nd, Monday 2012, and this is the daily report for gold and silver. We have a moderately higher market today across the board in the precious metals, up almost a 0.5% in gold, which is currently trading up about $8 on the day. As you can see, 1676 is our cash market bid, 1676.07. We have silver with a very strong showing, up about 2.26%, up about 75 cents, just shy of that. And as you can see, it's broke strongly through $33, trading currently at $33.40 per ounce. Traders, there are a multitude of outside factors this morning that are genuinely fueling this latest rally in the precious metals markets. And I wanted to look at those very, very briefly together this morning. First of all, we have a weaker US dollar. When we look at a Heikin Ashi chart, and then we'll convert it. This is our US dollar. This is a weekly chart. And as you can see on a weekly chart, what we have been witnessing is as follows. We had this market genuinely form a top right up here around 82. As the market came down, you can see the support that it found right around 78, came back up to retest those highs, but was unable to do that. And for the last 3 weeks has been trading lower as a whole. The next chart that we really want to take a look at, of course, is going to be the crude oil market. And crude is up substantially today, currently trading basis the May contract at 105.23. And traders, what we're looking at currently, basic candlestick chart, this is the daily May crude oil, and you can really see this trading day today, this long green candle. The other thing that we're noticing is that we do have a variation off of a Three River Morning Star here, with a long red candle here, a star in the center, and then our green candle here. We'll have to see where this market wants to go, but the one thing that you can see in terms of a technical basis is when we take a look at this recent high, this is around 102 here. If you kind of move over that, you can see effectively we've gotten a close above that point, and to me, that is very bullish. Traders, as I mentioned, I would go ahead and convert the weekly Heikin Ashi dollar chart into a regular candlestick chart, and you can see it here. This is our fourth week in a row. As you can see, that this market has been headed lower. Simply what I did is I created a horizontal line to the lows of the dollar, and what you're going to see is a couple of spots within history. Back, first of all, in October. This is of 2009. Then again, October, seasonal, isn't it, of 2010, we've hit these lows. This is in the dollar. And so that now that it's coming back down, this is really going to be the critical area we're going to want to see if the dollar, on a technical basis at least, can find support. Traders, one last chart before we get into gold and silver, and that is the roaring rally that we are witnessing in the Standard & Poor's. This, of course, is a weekly chart. It is in Heikin Ashi format, and one thing is quite evident when we take a look at this chart, and that's this really clear uptrend that we've had. We've had, of course, lower wicks are absent. Nice body size, pretty consistent throughout, but you've got this tremendous channel as this market trades up. And of course, what is interesting to me is this absolute breakout above this top right in here. So we're probably going to see some continued strength within the Standard & Poor's. Realize that the fact that QE3 is back on the table is bullish not only for the precious metals markets, but absolutely for the stocks. Now, Let's take a look at the precious metals markets, gold and silver in specific. First of all, you know that we have long positions in both. Our silver position has just gone into profits, 33.10, as you can see, current print. Of course, this is a weekly. It's going to lag behind, but you can see it's already doji-like. It's already turned green. We've got an average price of 32.50 on that particular market. And then when we take a look at our Henkin Ashi chart, and this, of course, is 360-minute chart. This is of the spot silver. The one thing that you can see is it's traded very, very similar to what we saw in the gold market. And what I mean by that is when we take a look at this, this is what we called wave 5 right in here. And then as the market came down, rather than a classic ABC, we had this A, B, C, D, and E, this triangle correction that we had in gold. You can see the same kind of formation forming here. This is what I'm looking at as the conclusion of our basic corrective wave, and it was a long one. And as I said, my current belief in terms of count is we've got a 1, a 2, and then we are currently in our third wave here. When you consider in terms of where we're at, I think we could see a nice move within the marketplace in terms of silver. It's got great performance definitely today. Let's take a look at gold. Now, gold in a very, very similar way. Let's kind of line this up for us. There's no doubt, it is my belief currently that the correction that we had recently experienced is over. This was that bottom of it. I'm labeling it as E. But there's going to be a real critical area that we really see the market need to take out. And I'm not the only one talking about this, but this recent high up here, which is roughly at around 1691, 1692 in that area, that's going to be a critical area of resistance that for a technical read on the market is telling us that gold is headed much higher. In other words, that this corrective phase, this A, B, C, D, E, that in fact is over. What is really going to give us very, very strong confirmation to that regards has got to be a breakout which is going to put us above this particular area. And if in fact we see that market move above that area, as I said, my target is roughly 1724. I think that that's achievable in terms of this particular trade. Of course, we are long right now, average price 1650. So we've got some profits beginning to build in this position. And as I said, we really have to see how it reacts. If it's going to take this out, this 1790 area, that's going to be a really, really strong confirmation that this correction is in fact over and we are fully immersed in an impulse phase of the market. Traders, for our last chart of the day, I want to look at this same chart. This is a 360 chart. All I've done is remove the Henkin format, and now you can see it's in straight candlestick format. But here's what I've done. One of the Elliott wave rules is that wave 3 cannot be the shortest or smallest of any of the impulse waves. Now that we have wave 1 firmly in place, which is from here to here, simply what I've done is I have created a linear line. It is a scalable line from the beginning to the conclusion of wave 1. I've moved it over to start at the beginning of wave 2 to give us an idea if wave 1 and wave 3 are equal. This is pretty much where we'd go, roughly around 18, 17, 17, somewhere right around there. So a target for this marketplace, I think, between 1717 and 1724, I think is a valid and realistic target for this trade. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.